It is January 9, 2026. Look at your portfolio. Look at the VIX. If you think the last 12 months were chaotic, I have some very bad news for you. We are just getting started. For the last 20 years, one woman has been in the room every single time the global economy tried to commit suicide. The 2008 financial crisis? She was France's finance minister. The European sovereign debt crisis that almost wiped out the banking system in 2011? She was running the IMF. The pandemic crash? She was running the European Central Bank. They call her Mrs. Crisis. And when Mrs. Crisis starts telling you that the world is breaking apart, you don't change the channel. You call your broker. Christine Lagarde, the president of the ECB, just gave what might be the most chilling interview of her career to Bloomberg. She's approaching the end of her term in 2027, and she isn't talking about soft landings or transitory inflation anymore. She is talking about a world that is, quote, fragmented under our eyes. We have a returning Donald Trump in the White House who has already ordered military strikes on 7 nations in the last year. We have a trade war that is rewiring the veins of the global economy. And we have Europe, the second largest economic bloc on Earth, paralyzed by bureaucracy and terrified of its own shadow. Why does this matter to you, sitting in New York, Chicago, or London? Because Europe is the canary in the coal mine. And the canary just stopped singing. In this video, we are peeling back the layers of Lagarde's final warning. We're going to show you why the European doom loop is about to infect the US dollar, how the new geopolitical order is crushing the S&P 500's hidden revenue streams, and exactly what you need to do before Mrs. Crisis clocks out for good. Buckle up. The era of stability is officially dead. To understand the gravity of what Lagarde just said, we have to look at the scoreboard for 2026. The world looks drastically different than it did just a few years ago. In her interview, Lagarde explicitly mentions the emerging contours of a world redrawn by US President Donald Trump and his country's arch-rival, China. Let's translate that from diplomatic speak to Wall Street speak. She is saying that the globalized order, the thing that made your cheap t-shirts and your Apple stock go up for 30 years, is gone. It's not changing. It is gone. Since re-entering the Oval Office last year, Trump hasn't just tweaked tariffs, he has taken a sledgehammer to the status quo. The prompt for this video confirms that in the last year alone, the US has engaged militarily with 7 sovereign nations. Think about the inflationary pressure of that. War is inflationary. Disrupted shipping lanes are inflationary. When the US decides to rewire trade in America's favor, as Lagarde put it creates winners and losers. But mostly, it creates volatility. Lagarde admits that this new reality is forcing a reckoning. She actually thanked Trump in the interview, sarcastically or not, saying, President Trump has triggered that momentum, so, thank you. Why thank him? Because for decades, Europe has been asleep at the wheel, enjoying cheap energy from Russia, cheap labor from China, and free security from the United States. Lagarde sees the writing on the wall. The US is becoming an economic fortress. China is aggressively expanding its sphere of influence in the global south. And Europe? Europe is sitting in the middle, arguing over paperwork while the building burns down. For the American investor, this is the stage 1 risk. If Europe cannot pivot to this new world order fast enough, the 20% of S&P 500 revenue that comes from across the Atlantic evaporates. We saw this with the deflation scare of the 2010s, but this time, it's not about prices falling. It's about relevance disappearing. Let's get technical for a minute. Why is Lagarde so frustrated? Why did she tell Bloomberg that slow decision-making is hampering Europe's ability to forge its own destiny? You need to understand the fundamental flaw of the European Central Bank compared to the Federal Reserve. This is critical for anyone trading forex or international stocks. When Jerome Powell and the Fed want to move, they move. They have a dual mandate, stable prices and maximum employment. They serve one country, one treasury, one fiscal policy. It's a speedboat. Lagarde is driving a cruise ship constructed by 27 different architects who all hate each other. The ECB manages the euro for countries as different as Germany and Italy. In the interview, Lagarde described herself as Mrs. Crisis. She said, I'm not a quitter, when you have a mission, you have an objective, you just have to deliver. But look at what she's delivering against. She mentions that the bloc is mired in bureaucracy and discord. While Trump is slashing regulations to weaponize the US economy, and China is state-subsidizing everything from EVs to microchips, Europe is holding committee meetings. The economic mechanism, here is the nightmare scenario Lagarde is trying to prevent, stagflationary fragmentation. Inflation in the Eurozone has finally stabilized at 2% after the massive shocks of the early 2020s. That's the good news. The bad news? There is no growth. When you have no growth, but you have high inequality, business investment freezes. Lagarde explicitly warned that inaction is a threat to business investment. If European companies stop investing, they stop buying American software. They stop buying American machinery. They stop advertising on American platforms. This is the wallet connection. You might think Lagarde's frustration with Brussels bureaucrats is a European problem. It's not. It's a Q1 earnings miss for your favorite tech stock. But the economic stagnation is just the fuel. The spark is politics. And this is where Lagarde gets surprisingly personal. She is French. She turned 70 last week. She has seen presidents come and go. But when she looks at her home country, she sees a society tearing itself apart. We cannot function with societies that are deeply divided, and where a large majority feels left out, she said. She is referring specifically to the rise of populism, the national rally in France, and similar movements across Germany and Italy. Why does a central banker care about who wins an election? Because populism is fiscal kryptonite. Let's look at history. When populist governments take power, whether on the far left or the far right, they tend to do two things. 1. They spend money they don't have. 2. They attack institutions. Lagarde is terrified that the rifts dividing France will lead to a government that rejects the euro's rules. If France, the second largest economy in the EU, decides to ignore deficit limits to appease angry voters, the euro crashes. If the euro crashes, the US dollar index rockets upward. Wait, you say, isn't a strong dollar good? Not this strong. If the euro collapses parity and dives to 80 cents or 85 cents, US exports die. American manufacturing, the very thing Trump is trying to save, becomes too expensive for the rest of the world to buy. It's the dollar milkshake theory on steroids. The US sucks up all the global capital, but it chokes the domestic export economy. Lagarde knows this. She is watching the social contract dissolve from her office in Frankfurt. She ruled out running for French president herself, but she knows that whoever does take over in 15 months might be the one to pull the pin on the European grenade. This brings us to the most controversial part of her interview. The shade she threw at the United States Federal Reserve. Lagarde was asked about political pressure. Remember, in this 2026 timeline, Trump has been repeatedly criticizing Jerome Powell. He wants lower rates to fuel the boom, regardless of inflation risks. Lagarde's response? A total flex. I have never received a phone call from any of the leaders in Europe, because they know that they cannot do it, it's in the treaty. She then twisted the knife. I don't think that it is as strongly established from a legal point of view for the United States. The deep dive, this is a massive statement. She is essentially saying that the US dollar is at risk of becoming a political tool. In finance, central bank independence is the holy grail. If investors believe that a president can order the Fed to print money just to win an election, confidence in the currency evaporates. This is how you get Turkey or Argentina. Lagarde is claiming that the ECB, for all its faults, is structurally immune to this. Because there are 27 countries, no single leader can bully her. But here is the irony that Lagarde isn't saying out loud: the Fed might be under pressure, but the US economy is growing. The ECB is independent, but it's governing a graveyard. However, for you as an investor, this highlights a specific risk in 2026, the trust gap. If the market starts to believe that the Fed has lost its independence to the White House, we could see a massive capital flight out of treasuries. Usually, money flees to safety. But if the US is the source of the instability, and Europe is stagnant, where does the money go? Gold. Bitcoin. Commodities. Lagarde's confidence in her independence is a signal. She's telling the market, we might be slow, but we are stable. The US is fast, but it's becoming unhinged. So, Mrs. Crisis is leaving in October 2027. She admitted she thought this was a 5-year gig, not an 8-year marathon. Had I known, I would have given it a longer thought, she admitted. But she's here now. And the next 18 months are going to determine the financial future of the West. Based on her interview and the economic data, we can project 2 distinct scenarios for how this plays out for your money. Scenario A, the fragmentation crash. In this scenario, the shocks Lagarde warns about hit hard. The trade wars intensify. Europe fails to rearm or reform due to bureaucratic gridlock. The result, a major European sovereign debt crisis returns. Italy or France faces a bond market revolt. Market impact, the euro plunges. The US dollar spikes to dangerous highs, crushing US earnings. The S&P 500 corrects by 15 to 20% as global demand dries up. The play, cash is king here, but specifically USD cash, coupled with short positions on European indices like the DAX or CAC 40. Scenario B, the Fortress Europe pivot. Lagarde's thank you to Trump turns out to be real. The shock of US isolationism finally forces Europe to federalize, creating a unified banking union and a unified army. The result, Europe becomes a genuine competitor again. Capital flows back into the euro. Market impact, the dollar weakens. Emerging markets rally. The play, buying undervalued European heavy industry and defense stocks that have been beaten down by years of pessimism. The wildcard, the 2026/2027 US recession. Lagarde hinted at a world prone to shocks. If the US enters a recession while Europe is already flatlining, we are looking at a coordinated global downturn similar to 2008. But this time, with higher interest rates and geopolitical hostility, central banks won't be able to print their way out of it together. They will be fighting each other. Christine Lagarde said, "I hope we come to a moment of reckoning." That is not a statement of hope. That is a threat. A reckoning means payment is due. For 20 years, the global economy has run on cheap debt, relative peace, and globalization. Lagarde's career, from the GFC to the pandemic, covered the era where we tried to hold that world together with duct tape and money printing. Now, she is looking at the exit door. She sees Trump. She sees China. She sees a radicalized, angry population in her own backyard. And she is telling us that the duct tape is peeling off. Mrs. Crisis says she stays calm by breathing and drawing on her own resources. You don't have the resources of a central bank. You can't print money when you have a liquidity crisis. Your action plan. 1. Audit your exposure. How much of your portfolio depends on European stability? 2. Watch the spreads. Keep an eye on the difference between French and German bond yields. If that gap widens, the reckoning is starting. 3. Hard assets. In a volatile, fragmented world, paper promises are the first to burn. Gold, land, and commodities are the only things that don't need a politician's signature to have value. The world is changing. The managers are retiring. You are on your own. Thanks for watching. If you want to know which 3 assets I'm buying to hedge against the euro collapse, check the link in the description. I'll see you in the next one.